Now I would like to introduce Lachlan Wallace, who's the Managing Director for Investigator Resources. And Lachlan's going to talk to us today about Australia's only pure silver project. Please welcome Lachlan.
So we all know that in times of global uncertainty, investors turn to gold as a store of wealth. But what is less well understood is that when the precious metal markets run, it's actually silver that outperforms gold. And this happens in general. Gold gets off to an early start and silver lags. But as the gold price overheats, the market becomes expensive, investors turn to silver, creating a powerful second wave that basically captures and eclipses the gains that gold makes. And if we look at the last sort of 50 years, the major bull runs we see in the 1970s, we had a period where gold went from $35 US up to $850, so really impressive gains, about 24 times. Over the same period, silver was up 35x. In the last major bull run in the early 2000s, gold quadrupled, silver over the same period, tenfold. And what we've had here is this latest bull run that we're in now started with gold starting to move price-wise in about 2022, and true to form, silver lagged, but it's now starting to catch up. It's up 70% this year alone, and if history is any guide, it's got a long way to go and catch and then eclipse gold. And it does this for a number of reasons, but in part because when gold goes off into the vault, silver gets up and goes to work. It's got dual utility. Whilst gold is primarily a monetary metal, silver is both a store of wealth but also an important industrial commodity. It's used in our EVs, solar, basically all manner of green energy technology. And as the world continues to decarbonise through electrification, there are really strong, powerful structural forces pushing the demand for silver, which is driving that silver price forward. Overlaying that, we have around a quarter of production that is mined from primary silver mines. So these are the guys actually looking for silver. The vast majority is actually coming from miners that are focused on gold or copper or lead or zinc, and silver is just a byproduct. And what this means is that these silver and gold miners, the gold and copper miners are not changing their production profiles just because the silver price has gone up a little bit. And so effectively the supply response is basically price inelastic. So we've got this classic setup where decarbonisation is driving demand, but the supply side is basically non-responsive. And generally what happens then is you get a supply squeeze and price starts to push upwards. In addition to that, of all the silver that is mined, we've got about 75% coming from Latin America, Russia and China. So hardly the poster children for geopolitical and operational uncertainty. All these areas are subject to things like material supply shocks and disruptions. There is very little silver that's being mined from true Tier 1 investment grade jurisdictions. The silver industry over the last 4 years has highlighted deficits in the silver market in the order of about 100 up to 250 million ounces a year. This is a lot. This is up to a quarter of the actual annual supply of silver. With decarbonisation fueling that continued demand, the deficits are forecast to continue. Overlaying that is the macro front, so we've got huge amounts of money printing all around the world, credit downgrades, increasing debt, and this is basically causing a loss in confidence of fiat currencies all over the world, and investors are now seeking out precious metals as a protection against inflation. Now, central banks were onto this early. They started doubling their gold supplies a few years ago in terms of their inventory to protect their own wealth, and retail has sort of piled in. But where does this leave us in today's cycle? What we've seen is that although gold has had a fair bit of uplift, there is little retail enthusiasm behind silver at this point in time, but that is now starting to turn. As I said, it's up 70% this year alone, but silver is still historically cheap. So what's on the screen at the moment is a gold to silver ratio. This is the price of gold per ounce versus the price of silver. Since the gold standard was abandoned in 1971, that average has been about 65 to 1. It's now currently up around 80 to 1. And what that's basically showing is that the gold price is relatively high compared to silver. Generally, what we would see is over time that price correct and just reverting back to the mean here, so back to 65 to 1 would require silver price to go in excess of about $65 US, so up another 30% from where we currently are today. And of course that assumes that gold price doesn't continue to march on, which of course if that did, then all bets are off in terms of how far that silver price might react. So I guess in terms of the general investor, how do you take advantage in this silver market. You can buy physical silver. There's coins, there's bars, there's ETFs. But for serious leverage, it is the junior miners, in particular those that are moving from exploration development into production, that provide the greatest upside. And that leads me to introduce to you what I believe is one of the better opportunities on the ASX, and that is the Paris Silver Project, 100% owned by Investigator Resources. Now, I know what you're thinking, Paris sounds expensive, right? But no baguettes here, just a lot of high-grade silver, and 57 million ounces, in fact. It's located only just on the Eyre Peninsula, about 50, 60 kilometres north of Kimber. Importantly, Paris is one of the highest grade undeveloped silver mines anywhere in the world, but even more important than that, it is the only pure silver project of development scale in Australia. And that's important. There are plenty of companies out there touting their silver projects at the moment, but all of them, when you start to dig into it, they're lead or zinc companies with silver credit. And the reason this is important is that although silver has gone up 70%, lead and zinc prices have remained flat. So it's only the proportion of their production mix that is exposed to that pricing upside. Whereas by contrast, what we have with the Paris project is we are aiming to produce a silver doré. So it's a pure silver project, the only one in the country, and we are 100% leveraged to that upside. In 2021, there was a pre-feas study. It generated some reasonable economics, about $500 million of free cash for a relatively low capital intensity of about $130 million. But here's the thing, that study was done on a US $22 an ounce. We are now currently sitting at $53, or in Aussie terms, the study was at 34, we're now over $80 an ounce. If we run the current price deck through that original study, we don't generate $500 million, it's another $1 billion on top of that, so well north of $1.5 billion. So what we're doing at the moment is updating the DFS to capture all of that because, of course, as silver price goes up, the other thing that occurs is your cut-off grade drops down, so you can bring actually more silver into the plan than the 27 million ounces that was in the study from 4 years ago. So that's where we currently are at the moment. We have a DFS study. It's basically capturing that higher price upside, leads to a larger pit, pink pit in the pre-feas. The grey is the DFS, so larger pit, wider, deeper, more ounces will come out of it. Oh, don't know what happened there. Perhaps you could fix that one, Peter. While Peter's addressing that, we'll just continue on.
Yep, there you go.
Awesome. Cheers. So in addition to that, we have also confirmed that we have a long-term secure water source at Paris. So the pre-feas study that I showed earlier, that had assumed that we were going to need to operate a filtered dry stacked tails setup. But since then, we've confirmed that we have plenty of water and can go to a conventional wet tails. And this is important for two reasons. Capital cost-wise, it means there's not a heap of filtration to dry out all of those tails prior to rehandle, as well as a reduced detoxification circuit, because the beauty of sunlight is it breaks down cyanide. So instead, we build a low-cost, unlined tails facility, very generic in nature. Cyanide is broken down by sunlight, which is pretty handy. From an operational point of view, we are also reducing the amount of rehandle. So rather than rehandling what was 11 million tonnes, probably going to be more like 15 to 20 million tonnes of tails at $3 a tonne. That is just now replaced with low-cost pumping. So they're the types of things that we'll be capturing in the DFS. That will be put out over the next few months, and then we'll be able to talk about those figures with a bit more clarity. But the aim here isn't to produce a feasibility study with a nice MPV and IRR, that's all great, but the real focus here is to get to first silver pour. So in parallel, we are advancing with the permitting. So we've been working through the scoping process with South Australian Government. That process has been very positive, and we would aim to have our mine lease application submitted by about the middle of 2026. In parallel to that, we are also engaging with the traditional owners of the land. We have a long-term respectful relationship for about 15 years worth of exploration. During that, we have identified culturally sensitive areas, songlines, etc., and ensured that our design layout for the mine avoids all of those areas. And we'll get into the more formal, discussions and final surveys associated with that mine layout early next year as part of that native title mining agreement. But the Paris project in itself is just the beginning. It sits within a 15-kilometre long silver mineralisation district. It's been peppered with holes that just highlight that we have a district-scale silver mineralisation opportunity on our hands. For instance, here you can see up to the north Apollo, 5 kilometres north of Paris, 8 metres, 1,260 grams a tonne. 11 metres to the south on ground that we share with Alliance. I know Steve is actually speaking next. We have Athena and Hestia. At Athena, we have 5 metres at almost 500 grams per tonne. not followed up because that was really targeting an iron ore through the Trafford and ironclad days. So we've structured an earning agreement with Alliance to be able to continue drilling out those areas with the hope that areas like Athena, Manto, Perseus may become satellite pits that can feed into the established infrastructure that we create at Paris. And obviously anything that is proximal to Paris has a lower threshold from an economic point of view as well as a permitting point of view because it'd be utilising the same processing and tails infrastructure. About 80 kilometres to the east, we have a collection of tenements that we call Morgans. So there's been limited drilling there by Investigator a couple of years ago. It's returned some reasonable results, including 12 metres at 240 grams per tonne. We've recently acquired a couple of other tenements, Urilla Hill and Corunna, just highlighted there on the map. Urilla Hill, last month we undertook a soil survey, so geochemical work, that's all going through the labs at the moment. Next month we get into Corunna with a gravity survey. The idea here is really look at the existing geophysical data, add in the stuff from Urilla Hill, Corunna, as well as drilling to be able to adequately rank and prioritise a robust drilling program for next year with the view that any type of asset from or viable deposit from Morgan may be able to feed into the Paris plant under a hub and spoke model. Again, lower permitting and lower economic thresholds given the infrastructures already in place. And at the moment, we're kicking off drilling at Curnamona. So we have young Callum out there at the moment, organising that at the moment. So Curnamona is on the eastern side of the state, not far from the border with New South Wales, close to Broken Hill. It's actually in close proximity to the White Dam gold mine and actually quite close to the Havilah assets, Moodaroo and Kalkaroo, that Sandfire have recently earned into. We have three distinct areas there that have coincident IP, mag, gravity and soils, highlighting the potential for large sulphide bodies. And yet, despite that and the fact that there is historical gold and copper mining within that sort of tenement areas, the area has never been drilled. So that maiden drilling program is kicking off this week and really looking forward to understanding what that might look like. From a financing point of view, we are really well financed. We actually raised $10 million earlier this year. We did that at an 8.6% premium to the 15-day VWAP, really just highlighting, I guess, investor confidence within the team as well as project suite that we have. That leaves us about $15 million cash at bank. We have another $2 million coming into the business through the sale of our Molly Hill assets, so our tungsten assets that we had in the Northern Territory that was sold off to Taiwan. And in addition to that, we have about $19 million of options that are currently in the money that will convert over the course of the next couple of years as those options become closer to expiry. So all told, about $35 million over the next few years in the business. So no need to go back to shareholders to tap funds, plenty of money to be able to basically advance the Paris project all the way through to FID, so going through the DFS, through the permitting process to the final investment decision, whilst concurrently running a very aggressive exploration program over those tenements I was just speaking to prior. Next 6 months, news flow is looking pretty good. We obviously have two main work streams, the DFS, so effectively that will be out first quarter next year, and we'll be continuing to update public on how the permitting is going through, those major milestones associated with MLA submission, NTMA negotiations, etc., as well as the exploration. So obviously the Curnamona drilling underway at the moment. Those results, hopefully we will see them internally for a nice Christmas present, but out to market probably around February by the time they go through the labs, etc. And then what we'll be doing is continuing to drill in that Paris Silver Corridor, not only targeting the areas that become satellite pits, but also targeting areas over the pit itself that form the first 2 to 3 years worth of production to get them to a grade control level of geological certainty, because that does assist in the project finance, which of course then leads to a lower cost of capital when we come to building in a couple of years' time. The Urilla Hill Corunna, that'll just feeds into the broader Morgan hub and spoke drilling program that'll kick off next year as well. So really to wrap it up, we've got strong structural forces that are really pushing the silver price along, really underpinned by the green energy thematic. We have a permit ready and build ready project that'll lead to DFS and in short time towards the readiness for construction with the Paris project. We obviously have the ongoing exploration opportunities to continue to build out that pipeline. And we're well funded to be able to do it. In fact, our balance sheet has never been stronger. So I guess if you are thinking silver, think Investigator. Thanks very much.